on the book, the way it's going to appear is that's going to be inside, that's their ECN. Okay. Does this make sense to everyone? So their ECN is on the book. It says UBS Securities wants to buy blah. All right. So on and so forth. And these are all the designations for past, present things that exist or have exist. Okay. So this is the order book. So this is what I was talking about. So an order book is an electronic list of buy and sell orders for a specific security and financial instrument organized by price level. The order book lists the number of shares or contracts being at the bid or offered at each price point for market depth. It also identifies the market's participants behind the buy and sell orders, although some choose to remain anonymous. The order book is dynamic and constantly updated in real time throughout the day. Exchanges such as NASDAQ refer to this order book as the continuous book. Orders that specify execution only at market open or market at maintained separately. These are known as the opening order book or closing order book, respectively. So the ask is the price a seller is willing to accept, and the bid is the price a buyer is willing to accept. And this is kind of what it plays out to be. So in an order book situation, you're just going to see the top of the book, which is the most current price usually, and the bids below. Okay. So if I'm buying, where am I going to get filled? I'm going to get filled at the ask. I'm sorry, I'm going to be filled at the bid. And if I'm selling, I'm going to get filled at the ask, and I'm going to buy a cover at the bid. Okay. And then on this side, this is time and sales data, which is kind of different, okay, than level 2. And it's actually more useful than level 2. All right. So level 2 is what generally a lot of people are familiar of, especially people who are quote unquote day traders. And a lot of people try to understand level 2, and it's complete bullshit, and I'll tell you why. But you need to understand what level 2 is. So level 2 will show a list of the best bid and ask prices from each of these participants, giving you insight into the price action. Knowing who has interest in a stock can be useful information. So do not confuse this though with time and sales data. This is time and sales data. Okay, so you see, like, for every minute or second that goes by, it's going to tell you. So at 2 o'clock, at 2:42 and 9 seconds, there was 200 shares that were bought at $180.01. Okay. Level 2, on the other hand, all right, is going to tell you, hey, this person is looking to buy 100 shares at $644. Okay. And this person over here is looking to sell 300 shares at $644.89. Okay. So this is level 2. This is time and sales. Level 2, time and sales. Very different. Okay. This is just who's offering. And then these guys right here, these are the ECNs essentially. Okay. And they can come in all shapes and sizes. No, level 2 is useless regardless. Okay. But I'm going to teach you about it, and then I'm going to like bust that bubble immediately. Okay. So people who talk about level 2 generally, in my opinion, are bullshitters. Okay. More useful information is time and sales data, not necessarily knowing who's buying and selling, because we'll get into that. Okay. Level 2, how to read it. All right. Simply put, a level 2 window is split into 2 sections, the bid and the ask. Okay. The bids, which are located on the left, show the total number of shares that buyers wish to purchase at a corresponding price. The bid side is arranged in descending order, with the highest bids on top and the lower bids following below. The ask side, located on the right, all right, shows the total number of shares that sellers wish to sell at a corresponding price. The ask side is arranged into ascending order, with the lowest ask on the top with higher prices below. Below is an example of a standard level 2 window. Okay. So generally speaking, This is the bid and this is the ask over here. Okay. And then this guy over here, this is part of level 2 window, contains the basic information about the stock, in this case, the S&P or SPY. Included is the intraday high-low, the last trading price, the previous trading day's closing price, today's opening price, the current percentage change, and the total volume traded. Okay, so this is a sophisticated somewhat level 2 because it's telling you also like the macro picture, meaning like what's today's close, high, low, percentage change, etc. And then underneath of that, you're going to see you have the bid and the ask. So someone here like EDGX is wanting 6 shares at $114.02, and whoever is using this ARCA ECN wants to sell someone 388 shares at $114.03. Okay? So, and this gets updated like within seconds usually. Now, there is something that, I don't know, has kind of gone away a little bit, but there's something that's known as the axe. Okay, now this is something, I don't know, people don't teach this anymore, I don't think, but the axe is the most important market maker to look for. Okay, and this can be anyone. All right, it could be any of these guys. That's important to understand. All right, but the only insight you can glean of who might be the axe is just by watching level 2, and I mean just sitting there, which is also nauseating. Okay, and something I never do, but I just want to teach you what this is because this is lost information. And this is the market maker that controls the price action in a given stock. You can find out which market maker this is by watching the level 2 action for a few days. And the market maker who consistently dominates the price action is the axe. Many day traders try to trade with the axe because it typically results in higher probability of success. So the axe may be someone who like throws out huge bid and asks and then tries to push the market in its direction that it wants. Okay, so why I don't use level 2. So the pros from the perspectives who believe in level 2. So we're gonna do like a pros and cons list. So the belief is level 2 quotes can tell you a lot about what's happening with a given stock. Objectively, that is correct, right? Like you can see in level 2, at least you can see who's buying and selling, right? Like that's, no one can dispute that fact. Now, is that useful information? That's the question, right? Have you guys ever had a friend that you know who knows like so many different facts, but you're like, in reality, you're like, oh, that's interesting, but it's completely useless, right? So it's kind of the same ideology. So you can tell what kind of buying is taking place. Maybe you could try to discern if it's retail or institutional by the amount or size. Large institutions do not use the same market makers as retail traders. They use what's known as dark pools, which means essentially all a dark pool is if I want to off shovel a 10,000 shares or 10,000 contracts, okay? And I don't want the market to know that I'm doing that because I don't want them to raise the price or lower the price so I can get a fair price. I will use what's a dark pool, and all of my buying and selling will be generally chopped up, and it will be anonymous, and it will go through different exchanges, and no one will know that I'm buying and selling a 10,000 lot block, okay? If you look at ECN order size for irregularities, you can tell when institutional players are trying to keep the buying quiet. Maybe. Okay. And by trading with the axe, when the price is trending, you can greatly increase your odds of a successful trade. So I'm just giving you the pros from people's perspective, okay, of why they choose to really try to understand level 2. And the only thing and the other part is they make the argument by looking for trades that take place in between the bid and the ask, you can tell when a strong trend is about to come to an end. This is because these trades are often placed by large traders who take small losses in order to make sure that they get out of the stock in time. So the list I just gave you sounds rational And it's like, yeah, okay, I can see why people would try to like know level 2. Okay? But this is how I view this, okay? Tricks and deception. All right. Although watching level 2 can tell you a lot about what is happening, which we can't dispute, there's also a lot of deception. And here are a few of the most common tricks played by market makers. Or, remember like the ECN that you guys saw were just the order makers, right? And then the market maker is the guy that fills it. Okay. So market makers can hide their order size by placing small orders. So blocks of 100, let's say, and then updating them whenever they get filled. They do this in order to unload or pick up a large order without tipping off other traders and scaring them away. After all, nobody is going to attempt to push through a 500,000 share resistance. Okay? So if you're looking at level 2 and you see like on the ask side, so you're looking to buy, and you see on one of the sides there's a 500,000 share order sitting there, okay, then people are going to be like, what the hell? Okay, that people that look at that, generally day traders. And then a 10,000 share resistance there, traders may still think it's a beatable barrier. Okay, so instead of just putting 500,000 shares out there, I may choose to just sell blocks of 10,000, right? So people are going to think, oh, that's easy. We can eat that up, eat that up, eat that up, eat that up. But they don't know how far the rabbit hole goes. Okay? And that's just to sell into someone, okay? To take a position on the opposite side. You don't know that it's like you can't be sure that that is actually what's happening. And that's the problem. So it's important to understand like that's a deceptive trick that can be used, but you're never going to know if it's actually happening. Does that make sense to everyone? Okay. Market makers also occasionally try to deceive other traders using their order sizes and timing. For example, JPHQ may place a large offer to get short sellers on board. Okay, so they may do something like this where they will throw out a huge offer of like 200,000 shares or 200,000 contracts. Okay. And then immediately pull that from one side and put it on the other side, because what they're trying to do is kind of like, I like to call it tip the boat. Okay. So what they're trying to do is like price is doing nothing and they want price to go up. So they already have some kind of long-term position. So now what they're doing is they're going to try to, basically psych people out that focus on level 2 to tip them in the direction that they want the market to go. Okay. So if they're long, what do you think they're going to do? Well, what they're going to do is they're going to show something on the ask side that's like ridiculous. Okay. Then people are going to be like, ooh, I should be a shorter right now. All right. Then all of a sudden pull that off of that real quickly, put it on the opposite side, and then the boat's going to tip the opposite way. Okay. So that's what they're going to try to do. Sometimes it works. Sometimes it doesn't. They don't care. They're not getting any orders filled. Okay. This is like the precursors to what's known as spoofing. Okay. Now spoofing happens a lot, meaning people put large bid ask orders and then cancel them immediately. Okay. And they do that to tip the boat. Okay. But spoofing can become super complex, and that is outside of the this course. Okay. But it's important to understand like how many games can be played on level 2. And so the question that you have to ask yourself is that can a retail trader actually discern any of this? Do you guys think he can? So knowing what you know, right, that can happen both positive and negatively, can a retail trader actually use level 2 to any kind of like um to any kind of detail? And the answer is no. So then why the hell does everyone teach level 2? It's bullshit. Okay? It really is. Some people think like maybe in penny stocks, maybe you can get away with it only because in penny stock land, there's not as much as sophistication. Okay, meaning like there's not a lot of people that even understand the market in penny stock land. And the second thing is like you're not going to deal with huge institutions. But if you are trying to day trade a normal stock, okay, and you're reading level 2, you ain't going to cut it. All right? And even in penny stock land, there are bots that I have seen that play games with people. And so when all of these people like post on Twitter about like, oh, huge offer, huge ass, blah, 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 it's nonsense. It really is. Because you don't know what these people are doing, and it's information you know. Like level 2 is information you should know about, but in context, it's not conducive to trading. Okay? And the other thing that they can do, like I told you guys, is market makers can also hide their actions by trading through ECNs. Remember, ECNs can be used by anyone, so it's often difficult to tell whether a large ECN orders are retail or institutional. Okay? Is any of this unclear? Like what level 2 is? What's the benefit of why people try to like really learn level 2, and what's the disadvantage? For some of you, this may have shattered your like conceptions about like what you hear about markets, okay, and what people do. You can't make sure you're trading with the axe. That was the point. Like the axe is something that people have referred to in like they may see like this one market maker seems to like throw out these huge offers and bids, right? And they try to trade with that. But like I just told you, it's all a deceptive technique, okay? To try to get people to push the market in the direction that they want to. You can't trade with the axe. That's the point. I introduced you to what level 2 was, and I tried to introduce like the opposite perspective of my own, okay? And what people teach about it, and then they forget the axe, but the axe is really just whoever is the biggest player on in the level 2 that generally dominates the entire thing, okay? But the axe is generally the guy that's generally got the most money to try to tip the boat in opposite direction, but you're not going to know what he's going to do, so it's completely useless. Okay? So hopefully you understand how I structured this, which is what is level 2, what people generally believe and or use level 2 for, and then why it's completely useless. Okay? So any person that tells you that they watch level 2 is a day trader generally. And the second thing is if they believe that there's some kind of like edge or they can read the tea leaves of level 2, they're full of shit. Okay? A lot of people don't like that, especially people from penny stock land, because they like people who trade like penny stocks. Like I said, it may be more feasible in penny stocks, but it's still like there's no point in worrying about that. Okay? So the thing is like if you tell them that, they feel really insulted. And it's not an insult. It's just like deal with the reality of the fact that like what you're doing, what you've wasted months of trying to do is just you're hitting yourself with a hammer. Because you're not doing anything that's like conducive to actually trading. Because trading is all about having an edge, and you trying to discern who's doing what is impossible, especially in the day of automation. Okay? So, now that doesn't mean like way back when, if you were on the floor, who doing what was useful information because it was just people versus people. But now there's a lot of sophistication. So, So the conclusion and my perspective, since each level 2 box updates in real time, an investor can use this feature to possibly see a direction of a stock. For example, if many orders are being filled on the ask side, this might be an indication the stock is heading higher, since buyers are clamoring to scoop up available shares at higher prices. Now, I have people that just watch level 2 just because. Okay, and some people just like watching it. And conversely, if orders consistently be filled on the bid or the side, it may be a warning sign that the stock is ready to fall, given the sellers are willing to dump their shares at lower prices. However, considering how much deception can occur on level 2 these days, it is pretty much worthless, and I never use it in the markets to make a trade, ever. Okay? Period. All right, another thing. Dome and sales. So this is just one thing. This is from TradeStation. Okay. Now, and I'm showing you this because I want you guys to see what it looks like. One. And the second thing is like what's offered, at least with TradeStation and different platforms may have something different. But this window right here is market depth. Okay, so here says, is order book reliable to know the size of orders? No, because it doesn't matter to you. Like I said, they're going to use size, right? They're going to use size to trick you into thinking that something's happening. Okay? That's a game that's commonly played. I just laid out like all the games that they play with size. So the pro side of using level 2, like the pros and cons, like the pro side of level 2 is people believe that they can read level 2 and get some kind of information out of it. The con side is that you can't know what someone's doing. Okay? It's the difference between what's reality and what's belief. Okay? Why if level 2 was so useful, many more people that use it would make a lot more money. Okay? It's not useful information. Is that what Norman says? Is this what is called reading the tape? Yeah, some people look at level 2 and think like, oh, I'm reading the tape. Sure. Zhang says, I saw a lot of gurus tell how important level 2 is and learn to read, but I just don't get it. What don't you get, Zhang? Understand that I don't use it, guys, at all, because it's completely worthless. You're never going to know what someone else is doing, period. Okay? In this day and age of computers, you are not going to know who's buying or selling. No matter how long you look at level 2, no matter how long you sit there in front of the computer, you're not going to know. Okay? And why do you care? Right? And people will be like, well, I care because I want to know if the stock's going up or down. Do you, even if you knew what someone was doing, do you honestly think that they know more than you and that they can predict the market better than you could possibly predict it? The answer is no. So why do you care? Like that's the thing. And gurus who like preach about level 2 don't have anything. Okay? They don't have anything, meaning all of their techniques are always going to be based on some kind of breakout technical analysis thing that is not repeatable. And then they preach about level 2 in some ways of trying for it to be a filter. And it's like, there's no edge. It's all just, you're just talking about randomness at that point. Okay? So the thing is, guys, is my job in this current course is literally to give you a robust, meaning we're going to talk about everything, okay? And to understand what stuff is, not that I use the stuff. Does that make sense? Okay? Because if you're going to educate yourself on anything, you need to understand what is out there. Okay. And maybe you find something. I don't know. But this whole idea of day trading and using level 2 is just bullshit. Okay. Day trading in and of itself is bullshit. But that's another conversation. All right. So what I wanted to talk about is this is level 2 as TradeStation does it, which is actually, it's a pretty nice like terminal actually. So what you're gonna see is you're gonna see like they've got all of these kind of like bars going on, and like so the green is represented here, which is kind of cool. I like that. And then what you're gonna see is depth. So you see like the market depth of the market, and then you have so this is the bid and the ask, and you see the ID is the CME. Okay, so you see at 24.35 and a quarter for the S&P, for example, there's 60 contracts sitting there, and then there's 200 to sell at 24.36. This I didn't even mean to do this, but this right here was the order, an order that was placed by I think it was the algo system, and you can see like this was a real trade, not based on this, but it kind of just shows you everything, which is really nice. Okay, and then you can actually buy and sell like on a terminal, kind of like right here at the bottom. Okay, so this in TradeStation is called TradeStation Market Depth. All right, and then this is the time and sales window. Now, time and sales window, I think if you wanted to create some kind of strategy like that was based on order flow, like this would be the only information that you could possibly read it. Yeah, but Zhang, did I mention entry? You said I don't know how to read it. All it is all it's gonna do, Zhang, is show you the bid and the ask. That's it. So like if you put your order here, let's say you put a buy order, you're gonna see it pop up in this window. Okay. And then so this is how much someone is selling. This is how much someone is buying. And each of these things just tell you, hey, this is how much. So someone's willing to buy 60 contracts. So there's a pool of people, 60 contracts, or one person, okay, is sitting here, and they want to buy 60 contracts at 24.35 and a quarter. So that's the bid. The offer is, or the ask is, someone is willing to sell 16 contracts at 24.35.75. And so what the market maker is going to do, or the exchange is going to do, is they're just going to try to line up these things and try to get these orders filled. Okay? But what you'll see is like there's 194 contracts sitting at 24.33 and a quarter, and 220 for sale at 24.38. Okay, so that's all it is. It's just telling you who's buying and selling, essentially, in terms of this is how many people are buying, and this is how many people want to buy and at what price, and this is how many people are willing to sell something at what price. Okay, it's like an auction. It's the best way to think about it. That's all it is. But what I'm saying is like people try to use this to play, find out where the market may go based on how many participants are trying to buy and sell at what price. And what I'm saying is like that kind of stuff it just doesn't work. Okay? It's fun to watch, but that's about it. Do you understand that, Zhang? Like, it's just a book of orders, essentially. Who's willing to buy at what price? Who's willing to sell at what price? Does that make sense? All right. The next thing in the middle is what's known as time and sales data. Now, what's nice about at least TradeStation is it tells you these are actually, so unlike the order book, which are just, these are prices that are sitting there, this is telling you what's being filled, meaning people that have actually paid dollar monies, okay, to at the ask or the bid, okay, meaning these orders were filled at the ask. So this person bought, which is why it's in green. This person sold, which is why it's in red. So this person bought 6 contracts at 24.35.75 at the ask. So they bought it somewhere over here. And then this person sold 8 contracts at 24.35.50 at the bid. Okay. So, and what you'll notice is some of this shit is odd. Okay. So it's like, why would, someone buy, 3 lots? Here's someone that bought 30 lots. Okay. Lots meaning, I shouldn't use lots because that can be, I don't want you guys to like talk to old school trader and say lots because it'll mean something different. So 30 contracts, 19 contracts, like why 19 contracts? Okay. So this is much more useful information that you could eventually turn into a strategy when you start having, like, let's say odd orders come in. Okay. Like consecutive odd orders. All right. So, and the nice part about this is if you put, the market depth or level 2 in this case over on one side, and you're looking at time and sales, it will make more sense. Like, and you can see who's actually buying and selling. These are just orders that are resting essentially. Okay. So you can see like who's getting filled and who and what. Okay. So that's that. And then the other part is TradeStation also has like a matrix. And if you keep this running, what it will do is it's going to show you volume at each contract point. Okay. So it's basically going to take this data and shove it in over here. Okay. Because volume and so the amount of contracts that are traded is the volume. All right. So it's going to start, if you leave this running for days, if not weeks, months on a particular symbol, well, what you're going to see is you're going to see the market is going to start filling all of these spaces out. And it's going to tell you how much volume was traded at each specific price. So it's going to take all of this information. So you see how it's 24.35.75, 24.35.75, so on and so forth. And then it's going to put it with, this is called a dome. It's going to build a dome. Okay. Where the most volume has gone off. All right. And some people just like to look at that. It's not useful to me, but I just want you to, so this is dome, this is time and sales, and this is level 2. Okay. It's kind of like the trifecta. All right. So some people like to just look at, wow, there was like, so if price, let's say, moved up and then it started to come back down, if you see a lot of volume that's gone off, like at this price, you may say to yourself, okay, there seems to be some kind of support or some kind of place where the market in the last, 3 weeks or so really liked that price point. Okay. So that may be useful in terms of, support and resistance. The other thing that we're going to talk about is MOC. All right, let me just pause for real quick. So is there any questions about any of the stuff we just went over? Speak now or forever hold your peace. Okay, so MOC is market on close. That's what that stands for. Okay. Some of us call it murder on close. All right. So this is something that's also not taught traditionally to a lot of people. Again, it's just information you need to know and understand. And it can also be sometimes helpful. But an MOC order is a market order that will be executed at or just after the close. It is sometimes used as a limit order qualifier, which means that if a limit order isn't executed during the trading day, that order will automatically be canceled and replaced with an MOC order. Imbalance of MOC orders. A situation when too many orders of a particular type, either buy, sell, or limit, for listed securities and not enough for the other matching orders are received by an exchange, also referred to as order imbalance. Shares experiencing an imbalance of orders may be temporarily halted if trading has already commenced for the day. If it occurs prior to the market open, trading may be delayed. Better than expected earnings or other unexpected good news can result in a surge in buy orders in relation to sell orders. Likewise, unexpected negative news can bring a large sell-off. So MOC is something that you can actually pay for in terms of like a data feed. And what it's going to tell you, and what I generally look for, is MOC orders for the S&P. Now, why would I do that? I do that because what I want to know is at the close, or 15 minutes before the close, is when all the MOC orders generally get executed, or are just left on the market. So the MOC orders, I want to know what it is, how much is selling and how much is buying. So what is the inventory on the close of the market at 4 p.m. basically? That's the question. And sometimes you'll have MOC orders that are, buy orders of billions of dollars. Okay. And that can be extremely useful because generally following stuff like that, you'll have a continuation of a price move up. Reverse is true if you had a billion orders to sell on the close. Okay. That means the inventory going into the overnight session is negative. And that may be that the price of the market will continue to move down negatively. Okay? Can you make a system out of that? No, because you don't get those huge kind of like exogenous billions of dollars being left on the, going into the market close. It doesn't happen every day. I would say maybe it happens like 5-10 times in a year. But it's interesting to know that what the market is, what the closing price or the closing orders are for the market at the end of the day, and the excess that had to be filled. Okay? And it always happens around 3:45 p.m. Eastern Standard Time. A lot of people don't know that. Okay? And in this example, you see an IBM, and this was a chart from a long time ago, but so the MOC was negative. Okay? And it was a big negative order on the close, and then all of a sudden price dropped from 204 to like 203. Now you may say, well, that's not really that big of a drop, but for a stock like IBM, which is generally does nothing, that's a pretty big jump. And it's because on the close there were these huge sell orders for that particular stock. Okay. Now, that doesn't mean, even if you have a huge sell order, that doesn't mean like the market will just continue to go down. It depends on the size and people's expectations. But the thing is like, I think again, it comes down to it's useful information to know. Okay. So that's why I'm sharing that with you. All right. So that's the MOC. And the next thing we're going to talk about is brokers and platforms. Okay? Just to get this out of the way, because I think in the next session I kind of want to like dive into each individual like platform. Okay, so the broker / platform. Now, TradeStation that I use is TradeStation. All right. Empirically, just TradeStation. So TradeStation is my primary platform and broker. All right. They're both. And the reason is that I like them is it's easy to buy and sell. They have great execution speeds. You can actually choose an ECN if you want to. They're good for options. They're one of the best trading platforms for automation for retail traders. Okay, meaning you can write a code inside TradeStation and automate. And commissions are generally cheap. Okay. Now, the con of TradeStation though is I wrote at the bottom is like a drug. This is one of the best platforms, hands down, and there are only two, okay, in the United States that offer you that have good commissions. TradeStation is a reputable company, okay, and their platform is bar none, okay. It's if once you get accustomed to TradeStation, if you try to leave, you will be disappointed by 99% of the platforms. Okay. It's not a multi-platform, which means like it only works on Windows. It's generally terrible for shorting penny stocks, but I told them, I mean, I at least put in a request. So I don't know if you guys can see this, but I told them, I'm like, hey, there's a company out there called Centerpoint. Or I'm sorry, I was like, hey, Interactive Brokers allows you to search for shares to short. Okay. And I was like, why don't we add that feature to TradeStation? And I said this like a year or two ago. I never heard back from anything, okay? But lo and behold, in 2017, they added this feature that allows you to actually look for shares to short. Okay? So it's getting better. All right? So there's that. And then another platform that I really like, it's not in terms of like sophistication for strategy automation, it's up there, but it's not as great as TradeStation. But the advantage is with Trade Navigator. They're a really excellent platform. Okay. They're broker agnostic. Okay. So TradeStation, you buy the data from TradeStation. Everything goes through TradeStation. They are your broker and they are your platform. Trade Navigator, on the other hand, is you pay for the platform, one-time fee. The platform is yours. You choose who your broker is. So you choose from their list of brokers or themselves who you want to execute your trades. So for those of you that live in other countries who don't have access to like TradeStation because they don't exist in your country, or I mean, I'm pretty sure Canada has, I don't know if they've barred TradeStation or something, but Canada doesn't have TradeStation. TradeNav may be a better option because you can look at TradeNav and you can say, okay, if I buy this platform, right, can I use my broker? Because it's a great platform. All right. And they allow you to build code. They have some advantages over TradeStation. Like they have what's known as market playback, which I think is a really cool feature, which TradeStation doesn't. But TradeStation and TradeNav for retail traders, there are no other platforms that even come close. Okay. And this is why I hate when people run around and tout platforms, because any platform that I've ever seen is fucking garbage in comparison to these two. And I get in a lot of trouble because, people that I know try to make their own platforms. And that's great. But don't run around saying it's the best platform because it's shitty in comparison to these. All right. Now, I don't get paid by TradeNav or TradeStation to say any of this. I don't have an agreement with either of them. Okay. And the reason I don't is because if they do me wrong, I will leave. And I don't want them to hold me to anything. And I don't want to be part of the broker industry because I think it's slimy. Okay? Oops. Other brokers that I've used and recommend outside of these two, okay? But I don't endorse them as much because they're not as great. Okay? But brokers I'm okay with. All right? Centerpoint. Centerpoint's charting software is absolutely fucking garbage. Okay? Period. There's no advantage to them either way. But they have incredible shorting capability. Literally, you have to have like a $30,000 account. This is what Tim refers to as his, like, I think, secret broker. Okay. But the thing is like, you can literally almost short anything. Like, their edge in the broker industry is that they can, if you're into shorting like penny stocks, okay, they can literally find almost any short. So that, because they've done that, they're like 1 in a million in terms of, being able to execute on shorting shitty companies. Okay, but you will pay a shitload of fees. All right, just to even hold something short. NinjaTrader. So NinjaTrader, like Trade Navigator, is broker agnostic. Okay. You can code with NinjaTrader. All right. The thing I don't like about them is they've had some bad press for their customers and what they've done in the past. And I'm not going to go into that because I'm not a gossip like that. Okay. But you can read up, like, just do some research on NinjaTrader and kind of the shady shit that they were doing. Okay. Which is why I never put any of my indicators or any of that stuff with them, because of some of the stuff that they've done in the past. I just don't want to be associated with that. Okay. E-Trade, terrible platform. Okay. Terrible capabilities. All right. The only also terrible company. Okay. It's because E-Trade has some shady fucking shit that they've done in the past too. Okay. And on top of that, like, I mean, the only reason people choose to go with them is because, one, Tim promotes it. All right. And the second thing is I mean, because Tim's like a huge marketer. So, and the other thing is like they offer good shorts. Okay. Same with Interactive Brokers. They can't short everything like Centerpoint can, but they offer, decent commission with good shorts. Okay. Interactive Brokers, or IB, is commission wise, they're great. They also have a very interactive API, which means like I can write code in Python and execute on that platform with my Python code. So I don't have to rely on the platform that they provide because it's terrible. It's pretty shitty as well. Okay. And I can execute with my Python code on a chart that IB provides. So I can see my buy and sell orders and stuff. Okay. But I don't have to do any of the work on their shitty platform. All right. That's the advantage. The other advantage to them is like they're good for shorts. They have the short locator, if you guys have ever used them before. And their commission structure, I mean, I know huge hedge fund managers that use IB, and it's like, yeah, it makes sense because especially for their shares, for their stocks. So that's great. Brokers, I don't like whatsoever because I've had an absolutely horrid experience with them and they offer nothing. Scottrade, never fucking use Scottrade. Terrible. Speed-wise, everything about them is just god awful. Okay, there's not one. I can't even think of a redeeming quality. Okay, Robinhood, terrible. They're also not SPIC insured. Okay, meaning if they go bust and you have your money with them, you will lose all of your money. Okay. So keep that in mind. Maybe they, in the future or most recently of making this video, they have, okay, been SPSE, but you never, anything that offers you something that's free, especially in terms of like platform broker, they have to get their money from somewhere. So they're either taking the opposite side of their traders or their people's trades, or they have some kind of kickback, and it's never a good thing. Okay? So, this is something that is never ever talked about by any guru or shit. Not even in school. Okay? So, I need you guys to understand something, that anything that I ever like endorse in terms of like brokers or people that I align myself with, like, I mean, I guess everyone has a shady element to them, but the thing is like they're not total scum, okay? Like E-Trade and like scum, okay? So one thing you need to always look for when you are shopping for a broker to put your money in is you need to make sure, this is very key, and I want you guys to listen to me, okay, that you find people that are members of New York Stock Exchange. All right, if it's just stocks, New York Stock Exchange and FINRA. If it is for, they have futures, the CME group, which used to be the Chicago Board of Trade. And you need to make sure that they're SIPC certified. I think I switched the letters before, but they're SIPC certified.